to the masses. Perfect. Thank you so much, Rachel. Happy New Year, as I said. Welcome to OFNC's first session of 2023. We're really excited for today's session. We've got an incredible expert who has joined us from Europe to share insights on open finance in Europe, PSD2, PSD3. But before we get started, really just wanted to share, as OFNC is growing as a community, we have officially become the Open Finance Network of Canada as of December of last year, and we got our first bank member. ATB has joined as a member for the community, and we are just working diligently on our newsletter for January, focused on driving insights on the need for open finance to be put on the roadmap for us to start discussing when right access is going to be enabled, as well as when businesses are going to be enabled in the open banking system, and looking to when we're going to kind of expand out to different use cases that really will affect SMEs and consumers. So we're really excited to be here as a community. We're excited to bring you these monthly sessions. And we really wanted to kick off by Cindy introducing our keynote for today and our topic, sharing some knowledge, and then getting into some questions, and then sharing this out with the community. So I'll pass the mic over to you, Cindy.
Thank you, Michelle. Thank you for that update. Hello, everybody. Welcome to another roundtable discussion. My apologies in advance for housekeeping matter. I know this is scheduled till 1:30, but I have a client urgency, so I will hop off at 1. However, the floor is yours as always. We always want this to be more of a roundtable discussion for everyone's benefit. So please do feel free to get involved in the Q&A at the end of our keynote speaker's presentation. So without ado, our speaker today does not need that much introduction, so I'll keep this very brief. Panagiotis. Panagiotis Kriaris is a highly recognizable voice in the financial services industry. Most of us already recognize him as a frequent contributor to sector publications and podcasts, and he speaks regularly at events around the world on these topics. Like Michelle said, he's here today to give us a little better overview, given our Canadian audience largely, of what's been happening in the EU, which is a much more seasoned market for open banking and open finance and onwards. So if I have your name right, please do tell me. Please correct me if I have it wrong. Panagiotis, over to you.
Thank you. And yes, you have. So it's a common problem. So thank you for the invitation, for the privilege. I'm looking forward to the discussion. Let me see if I can share my screen. Not yet. And then we can kick it off.
Yes, Rachel, if you could ensure we pass the host over.
Yes, so let me, yes, now it's working. So I think you can.
And we can see it. It's
Yes.
not in presenter mode yet.
Yes, so, but now it should be, right? Can you see it?
It is now in presenter mode.
Excellent.
Perfect.
So thank you again.
Thank you.
And let's start. So actually today, I mean, before we start talking about what's happening in open finance and open banking, I think we need to go one step back and we need to talk about change, because essentially the topic is about change. So let's see what has changed. If you look at what we call traditional, old school banking or financial services, I think you're gonna relate to this picture. And actually it's a supermarket, but the concept is the same. So it's one product without any choice. It's a closed offering, and the approach is a take it or leave it approach. So this is what used to be the case, let's say 10, 15 years ago. Now, what we are gonna be discussing today is this. And I think this is, as you can understand, I mean, this is a typical supermarket, but if we bring the analogy to what is happening in financial services, I think you're going to understand that the change is a huge one in terms of going from one product, from one offering, to many. So not only I'm able to choose between different brands, between different products, but also I can do it on my own terms. So this is the discussion of today. And I think this is what we call open approach. And this open approach means essentially that financial services organizations today cannot avoid becoming these multi-brand supermarkets. So this is what the discussion of today is about. And there's one key thing that is facilitating this, and it's APIs. I think we keep hearing about the APIs, but basically what's happening is that APIs is basically a relatively old technology that has happened to become mainstream in the past, let's say, 10 to 15 years. And the key evolutionary difference here has to do with APIs having become the rails, facilitating the sharing of data. So they essentially from today, the logistics of what we call the open concept. So in that sense, APIs have become finance's new building block and the rails of the new APIs economy, offering ubiquitous, easy and straightforward connectivity among incumbents and challenger players alike. So in essence, open banking is the evolution of banking and finance in the open APIs in what we call the APIization of financial services. And as you're able to see, we have some key things that are differentiating the APIs as we know them today versus the traditional setup. So the first one is that they're real time, they're plug and play, so you don't need integration, which is key. They're fit for purpose, so they're efficient, and they're future proof, so they are, let's say, facilitating the innovation. Now, the result of this is that the financial services competitive landscape is being redrawn. As we have an increasing number of players entering the game and claiming a pie from what I think is a global revenue pool that amounts to maybe trillions of dollars. So you have social media companies, insurance companies, auto companies, big techs, as we all know, travel companies, telecom companies, supermarkets, airlines, you name it. Everybody now seems to be playing or can be potentially playing in this new kind of field. And probably the most interesting part of today's transformation is exactly the match of open banking with the rise of what we call, so what we see here is essentially the platform economy. And this is actually for me the business model of the future or of the present, if you like it. Now, let's talk specifically about the open banking. So I think starting is a good starting point to understand what are the drivers and what are the players, because we do have different stakeholders. And I think it's important to say that although the disruption of financial services has started clearly before the revolution that we call open banking, the introduction has certainly of open banking being a big innovation boost across the markets. Of course, we cannot generalize this across the globe, but in general, in markets where we have, and I think this is the case with most markets around the globe, open banking has boosted innovation. So looking at the players and drivers, I think we can see, for example, so one side is coming from the regulation. So you do have the regulators trying to foster competition, empower customers, facilitate collaboration. You do have governments working with regulators, as of course. And then you have the competition. So you have, for example, the incumbents, the financial organizations, and then you have some new players. So the so-called fintechs, it can be neobanks, it can be any player. Of course, as I said before, we also see new players entering the game. So in this sense, the competition has been increasing. And of course, we have the customers. We have the customers on the retail side, and we have the customers on the business side. And mainly we have the kind of the so-called SMEs, the small medium businesses, because they're the ones who are mostly in need of innovation and of products that are servicing their needs, which is something that has not been happening up to now. And in the middle, of course, we have the open banking, who is trying to, who is kind of connecting all the dots that we see here. Now, what are the options? Because globally, from what has been happening up to now, I think we can identify mainly 3 options. And we're going to be discussing about this in more detail. Of course, the first one, the one that we're going to be focusing on today, is the one that is driven by the regulator. So that's the European model, or that's the UK model. So in this one, very simply speaking, what we have financial institutions forced to provide access to their data. It's all about the data. That's as simple as that. Then we have the market-driven. So we go to the other side. US is probably a very good example of what this means. So this means that the market is in the lead. So it's not, we don't have a regulator that is intervening and forcing financial institutions to provide access to the data, but the market kind of sort this out. And speaking about the US, for example, I think you all know one kind of main player that has been building connections over the past years. The name is Blade. So I think these guys have managed to build over the past years around, if I'm not mistaken, 18,000 connections within the country. And they are acting as an intermediary gateway, if you like it, connecting to thousands of most of the popular apps today in the US and globally. So take Venmo, take PayPal, take Coinbase, take Robinhood, you name it, these guys are behind. And that was exactly the reason why Visa has unsuccessfully tried to buy these guys. I think they were bidding $5.3 billion US dollars back in January 2020. It was unsuccessful, and there is a long story behind this, but this is actually a good story of how the market is driving this this part of the market. And then, of course, you have the hybrid model, which is something in between, meaning that you have, on the one hand side, the regulatory guidance, and you have the infrastructure sometimes facilitated by the government, let's say, by means of guidelines, by means of standardizing the APIs. Participation in this case is not compulsory, and that's for example the difference with the regulator-driven model, but it's encouraged. A good example is India. Here you can see, while I'm talking about India and about an interesting model that they have been applying here, you can see, let's say, an overview of what has been happening around the globe in terms of open banking. I'm not expecting you to be able to read and go through all this stuff, but I just want to indicate that there are many various initiatives happening around the globe, and you can also see the difference across the models. So, for example, you see the ones that are green, that are regulatory driven. You see the ones that are red, market driven, and of course, you see the ones that are mixed, the hybrid approach with the other color. And for example, just to give you a bit more understanding in terms of how the hybrid model has been working, we have, let's say, in India, a market approach whereby the government has taken a bit more active role in the ecosystem, in the development, and they have facilitated the digital bank public infrastructure. I think they call it India Stack. So it has been put in place by the government. Maybe the introduction has started more than 10 years ago, and it basically aims to create a unified software platform for the government, for the businesses, for the startups, for developers. So they're playing a key role. So that's a good example of the hybrid approach. If somebody wants to research more, I think you're going to find interesting facts.
Panagiotis, can I quickly interject before you move on to PSD2? We talked about, because in Canada, the discussion is still ongoing, and our advisory paper stated perhaps it was leaning towards a market-driven or a hybrid approach. Do you have any views on the pros and cons for those 3 types, and do you have a preference for which one, or does it depend on the country?
It's a good question. I think we're going to be discussing about what has been happening in Europe, so I'm going to be sharing with you some learnings as we speak. But I think the main difference between the pros and the cons is that, of course, the market approach, I would say it takes a bit more time, and you might be dependent on players on the market. So this might not be ending up in a way that is optimal. And for example, in markets where you have more complicated setups, so for example, Europe is 27 markets together. So you have to understand that, you know, from this reason alone, the market approach was difficult to be implemented. So I think in terms of when this is regulatory driven, of course it can go faster. Of course, you can have the standards facilitating the market. Sometimes this is not done in the best way possible. So you might have here, if you're dependent on somebody, on a central authority, saying that this has to be done in a specific way, this might be also slow, and this might not be as, let's put it like this, as innovative as people would expect. So I think there is a certain balance to be kept between the two models. But I think once we reach the learnings from the PSD2 in Europe, I think we're going to be able to expand on this more.
Great, thank you. Thank you.
But good question. So a very brief overview of what has been happening in Europe. So PSD2 stands for the Payment Services Directive. That's the second one, meaning that there was a first one some years ago. So that's basically a regulatory framework for payment services in the European Union. So this was adopted in 2016. The bill was signed back then and became effective on January 13, 2018. Now, this is when the PSD2 was transposed into national law. And that's part of what I was discussing before. So imagine that you have one regulation which is common. It's valid around the EU, but the implementation is local, meaning that you might have essentially 27 different approaches across the countries. So it is up to the local authorities to say how this will be done. That doesn't mean, for example, that it can be completely different, but even if you have a 90–95% overlapping and even a 5% difference, that can create some problems in a market of, let's say, 27 countries. So that's one thing to keep in mind. Then the other thing that is a key day for Europe is that we had, let's say, the introduction of the, so we have, in terms of the technical developments, which are called RTS, which stands for Regulatory Technical Standards, I think we have to mention two things. The first one is the strong customer authentication, which is, let's say, it goes in the direction of security and of fraud prevention. And then we have the secure communication, which is called CSC. We have the implementation of PSD2 in 2019. March was the beginning of the API testing, and then in September it went live. So the PSD2 went live. I have to mention, in terms of the strong customer authentication, which we will explain again a bit later, that this was delayed due to the concerns of stakeholders from the industry, mainly merchants, that they would not have enough time to make the system changes in order to comply with the new requirements. And that's why there was, if I'm not mistaken, an 18-month delay in terms of applying this. So the original date, implementation date, was March 2019, and there was at least an 18-month delay in terms of applying the SCA. So there was a kind of a phased approach in terms of what is valid and when this is happening. So this is PSD2 in a nutshell. Now, just to understand in a better way what PSD2 means, because PSD2 is in essence, let's say, the simplest scenario of open banking. And we have mainly two scenarios. So one is the so-called payment initiation services scenario, the so-called PAS. So you initiate a payment. And the other one is the account information services. So basically, you don't trigger a transaction, but you just initiate, you're basically acting on accounts, on information. So in general, what happens is that the payment initiation service is offered as a payment option on the retailer's website. It confirms, for example, that the retailer can transfer funds from one point to the other. And once this has been done, then of course the consumer can have the goods. And this can be competing, for example, with other payment options like credit cards. So the difference is that you go to the customer's account and you directly withdraw the funds needed without any intermediaries. So you imagine the consequences that might have for the industry, for credit card providers, for merchants. So there are many things to consider here, but that's in plain English, that's the main concept. And in terms of the account information, you just have access to the customer's account, and based on the information that you see, you can build on top additional services. The simplest one being, for example, if I have many accounts across different institutions, then I can gather all these accounts in the one view, in the one layer that is kind of sitting above all these different accounts, and I can see my balance across banks, transaction data, and based on this, there are other use cases as well. So, for example, I might be providing access to my account if I want financing. So the provider of the financing might be able to see, for example, how much money I have into the account, the transaction history, and based on this, they can make conclusions about my credit worthiness or not. So if we try to summarize all these use cases in a better way, so all these use cases, all the open banking use cases are based on these two scenarios. So on the one hand side, as I said, we have the account information. On the other hand side, we have the payment initiation. So I talked about the aggregation, the visualization that's coming from the account aggregation. Of course, you can have use cases like connected to savings, to budgeting, to predicting my balances, to managing, for example, subscriptions. And then, of course, on the payment side, I think I mentioned the opportunity of having of being able to pay directly through my account. You can have, let's say, rewards. You can have discounts. I mentioned the example of credit assessment via the looking at my account. So we have different business cases, but if we have to categorize what's happening, I think these are 5 categories that you see here. So it's payments, it's lending, financial benefits, aggregation, assistance and support in terms of savings. So that's a generic categorization understanding of main use cases around open banking. So the question is, okay, what are the novelties that PSD2 has brought? So I would say that the first one is that you do have some new market participants. They are called third parties. So these are new participants, so the third-party providers. So the acronym is TPPs. And I think, if I'm not mistaken, this is increasing competition. So imagine that third parties, which have to be validated by the local authorities. So there are certain conditions that one has to meet. But if you become such a third party, that means that you can compete on the market. So, for example, I think from launch, so from 2019, I think in Europe we have seen more than 2,700 new payment institutions and e-money institutions registered since then. So it's quite an impressive number, I would say. So that's the first one. The second one is the strong customer authentication, which I mentioned before. And the main purpose of this is to improve security. And how do you do this? Basically, you have 3 criteria. So it's something that the customer knows, for example, my password, something the customer has, for example, a token or something on my mobile phone, and something that the customer is. So it can be biometric information. So this has increased, I think, significantly the security and the fraud. And that's one of the main innovations of PSD2. The access to account is called, I mean, we do have in PSD2 some acronyms that are not easy to understand if you're not familiar with the jargon. But basically, you know, this access to account, access to account means that the TPPs, the third parties, can access the account directly to initiate the payment, which is what I mentioned before. And of course, how is this done? It's done through the use of APIs. So banks were obliged to provide access to the third parties through the use of APIs, meaning that banks had to build these APIs. You're going to be discussing how this was done, but this was one of the main things that were introduced by PSD2 because of the obligation of banks to provide this access. And of course, the consumer protection, one of the things that PSD2 brought was the increased consumer protection, meaning that, for example, there was a surcharge ban, so it makes it illegal to charge additional fees for debit or credit card payments. I mean, the implementation and the scope can be different within the countries, but the idea is one that applies throughout the European Union. So these have been the main novelties that PSD2 has brought. Learnings, and going back to Cindy, to your question before. So if I have to categorize the learnings, so what has been working and what has not been working, I think I have been mentioning some of the things that have been working, but let's try now to understand what has not been working or what could be improved. So for one, I think we could say that the lack of API specifications and standards has been a problem. So to understand what I mean by this, you have to imagine the following. So you have PSD2, and you have a specification. Banks are obliged to open their data to third parties, but it doesn't specify how you do this. What is the technology? So in theory, anyone is free to develop their own methods, even the APIs, even SCA methods. And for this reason, what we have seen is that we have seen that we have seen the development of various standards across Europe. I think we have more than 5 that are trying exactly to do this. So the most famous one and the one that is mostly used is the so-called Berlin Group. So that's a pan-European standard for open banking APIs that is based on the use payments on the PSD2, and it covers the technical requirements. Apologies, how you connect banks with third parties. In UK, for example, you have the UK open banking standard, and if I'm not mistaken, you have at least 3 that are used in a good extent in Europe. So you have the STET, you have I think the Nordea has developed another one. You have the Open Bank project. So you have a lot. So there is a bit of a confusion in terms of, okay, which one do I use? So that's one topic. Now the other one is, as we said, so banks were obliged to provide access through the APIs, but nobody was saying if the APIs that the banks were building are good or not. And sometimes, and this I mean I've been seeing this happening, so the banks have been making a poor job in terms of the quality of APIs providing. So sometimes you could see banks developing APIs only for the sake of developing APIs, but they were mostly not working. So this has been a problem. And the focus of the PSD2 has mainly been on the banks and the third-party providers, the TPPs, which I mentioned before. But I think that there was not the necessary focus in terms of promoting this to merchants and consumers. So if you do a survey, for example, if you go around and ask merchants and consumers, what is PSD2? What do you think? What is open banking? Most of the times, I think they're going to be looking you at like this and saying, what? So I don't think that the level of information that we need is there. So I think we need to do a better job in terms of promoting this. And this is going back to the delay of the strong customer authentication of 18 months, mainly because of the merchant adoption. So the merchants were worried that they were not that they would not be able to meet the requirements. Sometimes what we have been seeing is that there was one directive, I mean, the one directive and the many implementations I mentioned before, but this is an inherent problem of the EU, so I don't think that this is specifically an issue of the PSD2, but I just have to mention that this is the case. But what I wanted to mention is that sometimes there was a need for clarifications, and there was an issue in terms of, okay, how do these clarifications, who is doing these clarifications, and are these done quickly enough, and are they understood? So I think there was a need from the European authorities to do a better job in this sense. Of course, security versus user friendliness is a difficult trade-off always. So the introduction of the strong customer authentication was a balance in terms of user experience. So I think you're gonna we have heard many complaints, but that's the balance the trade-off that I mentioned. And the last issue that I have to mention is that there was a topic in terms of, okay, how do you know what are the third parties that are authorized across the EU, because this is done on a local basis, and how do you know this real time? How do you keep this up to date? So this has been an issue. There have been some fintechs trying to address the problem, but this was something that was not, let's say, addressed from the beginning. So these have been some of the learnings, at least in my opinion, that we can take from the implementation of the PSD2 so far. Now, let's go to the open finance, because there is a lot of discussion and debate. Open banking, open finance, what's the difference? Are we transitioning to open finance? Are we not? And what does it take? So I think it makes sense to understand exactly what is open finance. So open finance is basically the unification of different and more complex use cases that are still open banking use cases under one digital dashboard. So imagine, you go beyond the accounts and you include savings, you include lending, investments, insurance, whatever, pensions, mortgages, whatever you can imagine. So all the financial instruments that we find in our day-to-day, and you enable services to run on these products, both for consumers and for businesses. Of course, always with the consumer consent. And we have to say here that data is by far the most significant element in this transformation process. But it's not any kind of data. And this is actually what makes the difference. So the data that now play a very important role, it has to be actionable data, rich actionable data, as we call them. So they can be reused, they can be acted upon, and this makes the difference. So this is, in a nutshell, what open finance is about. The transition from open banking to open finance, I would say, is an issue of maturity. It's not one that's happening from one day to the other. But of course, you need one. So open finance is building upon open banking. Is not something that is separate. Now, let me give you a couple of use cases, a couple of examples, so that we understand better what open finance can mean versus the use cases that we have seen from open banking. So let's take financial advice. Let's take a hypothetical person. We take Zhang. Zhang has various products, and Zhang basically provides connectivity to an automated financial advice app. So it's a third party, as you mentioned before. So this third party aggregates and analyzes Zhang's data using AI, advanced analytics, you name it. And let's say that Zhang has a mortgage somewhere. So the TPP, this app, it goes out on the market, it screens the market, and it flags that, it compares the existing mortgage of Zhang with another one, and it thinks that the conditions could be better. And it asks Zhang, would you like to maybe change this to this provider? And if, for example, Zhang provides the consent, then there is the app initiates transactions on her behalf using the open finance data. And of course, in the future, you can have the app initiating multiple payments to pay the mortgages, or to do this in an automated way. So without doing anything, you have somebody working for you in the background and improving your financial position. And the same goes, for example, for businesses. So imagine if you have an SME and they have all types of accounts or insurances, and you have somebody like a third party again going out on the market and trying to understand if there are better deals. They also understand if you have any gaps in terms of liquidity, in terms of products, and they come back with proposals. And basically the SME can allow them to sign them up for new products or for replacing existing ones that are not competitive. So I think that there is a lot of potential use cases, and there is a lot of there is a lot of added value for consumers and businesses alike if this is done the right way. So this is what this is what we call open finance. Another example, which I think it's important to give you an understanding of the potential about open finance. So one of the use cases of open finance that I find very, very interesting is the sweeping payments, the so-called sweeping payments. What does this mean? This is so the umbrella is called variable recurring payments. So they are called VRPs. And basically sweeping is a subset, is a use case, is a sub-use case of sweeping payments. What are VRPs? As the name implies, you have the potential to become, as the name implies, you have a VRP. So you move funds within the existing account-to-account rails, so within the existing open banking rails, with the novelty being that via these VRPs, you have the customer who can give a consent, for an ongoing consent for doing payments initiated over time. So you imagine that you have a recurring payment happening from you. So you say, for example, that every first of the month, I want to transfer X amount of money from account X, which is my account, to account Y, which is again my account. Now, so this is the umbrella, the variable recurring payments. And sweeping is the use case where you have payments or transfers happening within your accounts. So my account X to my account Y. And non-sweeping use cases is everything else. So for example, I can initiate payments happening from my account to a third-party provider. So for example, I might be paying Netflix, I'm using an example, from my account directly in the future. So there are many, many use cases. And these kind of use cases, they could be competing directly with payment methods that we know today. So the direct debit, credit cards on file, with three main benefits. High level of security, which we mentioned before is one of the characteristics of open banking. The elimination of overcharging, given that they need my consent to do this. So you don't have somebody who is getting access to your account, but they need my consent every time. And of course, the minimization of fraud. So there are not card details to be stolen. We very frequently hear that, that many thousands of cards or millions of cards have been stolen, and the details have been on the web or on the dark web. So this is not going to be the case with this use case. So just to understand some of the potential of this kind of use cases that are going to be coming with the maturity of open banking and the transition to open finance.
Quick question, Panagiotis, on this one, the sweeping payments piece, you say here directly competes with other payment methods. And it sounds like it's a pre-authorized debit that we would, these are arrangements that we have, and it's regulated, the arrangements, the paper is prescribed by the Payments Canada Rule H1. And I'm wondering, how does this sweeping payment, variable recurring payments use case, what kind of added benefit does it provide a user and a consumer to the existing pre-authorized debit arrangements we have in Canada?
Basically, it's what I said. So basically you have, let's forget the security. So let's say that the security is not an option, although it is. So the second one is that you're not, so the money goes directly from your account, but you are asked every time that this is going to be the case, or you need to provide your consent. So it means that you don't have any surcharges. So for example, if you have a third party today charging you X amount of money for this, so let's say your bank, now this is not going to be the case because this is a payment directly initiated from your account. And of course, it's also the minimization of fraud, because as I said before, there are no card details to be stolen. So it's not, you just go to the account, you take the money and make a payment. So there is no credit card details that can be stolen and used on the internet without your knowledge or your consent. So and that's why I'm saying that this can be competing with direct debit, with card on file, with different payment methods. We have to see how this is evolving, but I'm just saying that it is opening up a series of ideas and of new uses that are quite interesting also on the user side, not only on the commercial side from the provider point of view.
And what I'm hearing is the upshot is it all kind of, one of the main aspect is it provides more control in the hands of the banker or the consumer.
The consumer, yeah. I would say transparency, control, and probably the avoidance of charges that are not necessary. So you minimize, you don't need any third parties in between, actually, right? So you can avoid some of the charges And you can also have control, as you said, because you have the overview. So you go in the app and you see exactly what you have and what you don't have. And if you don't want to, if you don't want this to be continue, you just can stop it at any moment. So you have several privileges that are coming.
You're
with
right.
it.
More visibility.
Yeah.
Yeah.
So let's go to the last part. So I think we have covered open banking, the transition to open payments. Let's try to understand the opportunity for banks. And I think that's important, because going back to my initial comment around the banks, I think there was there is still a misunderstanding from some banks at least. So they have seen mainly open banking as a compliance burden. And that's part of the reason why we had some problems around the banking. I think I can hear somebody, so I'm not sure if they can mute. Thank you. Okay, I can still hear somebody on the background. So if somebody can mute.
Katerina, can you go on mute? I'm not able to do it for you.
Yes, it should be Katarina.
I think you can do it on your side as the host.
Okay, let me see. Yes, I did. Thank you. Good. So let's talk about the opportunity for banks in this sense. So what I'm trying to say is that even though many banks have seen open banking as an unnecessary and costly burden coming from the regulation, I think the truth is that, and I rephrasing Voltaire here, so I don't want to be stealing anybody's words, but I think they would have to invent it had it not existed. And I'm going to justify why this is the case. I'm taking an extreme position because I think this is really an opportunity for banks, and I don't think that they have been utilizing this as much as they could. So imagine being a bank, and you see at the bottom, you have several options. You can comply only, so you can just you can just have your APIs and have other people getting information from you, or you can evolve in a digital platform player, which is the future. And I think you have many banks who have today this problem. So they have the problem, even mid-sized banks, even bigger banks, they have the problem of trying to compete in this new era and not knowing where to start from, not knowing how to adjust. I think open banking is providing in many ways the tools that some banks need. They just have to realize this. So let's take a look. So I'll just mention this transformational strategy that has to go from A to B, and A is the compliance and B is the evolution in a digital platform player. Now, what are the strategic choices for banks in this case? I think I mentioned before. So let's start from the point that banks today are not in lack of choice, because I hear sometimes discussing, I was a banker myself some years ago, and I'm having several discussions, and I sometimes hear we don't have so many choices. And I think it's exactly the opposite. So today, the spectrum of choice as to what banks might be able to become is the richest they ever had. But doing this depends actually on three factors. The first one is the willingness to adjust. If you don't want to do something, nobody can convince you. The second one is to have the right strategy, and this is what we're going to be discussing here. And the third one is execution, because as we all know, even if you have the best strategy in the world, if you execute the wrong way, then this is not going to work out. Now, if you bring the combination of these three factors together, you can have potentially a successful strategy. But separate, so one by one, is not going to be enough. So we see here the example of some banks and what they have been doing, going from the compliance side, as I said, to the side of, let's say, to the adding APIs and trying to monetize the APIs. And then we have concepts like banking as a service, which I'm going to explain. We have the marketplaces, we have the platforms, and we have several banks approaching this in a different way. And that's why I'm claiming that the opportunities are here. You just have to grab them. Now, if we understand, so let's try to understand a bit more details around the business models. So the most impactful new business models are what we call banking as a platform and banking as a service. And sometimes people are getting confused and they think that these are the same thing, although they are not. But they are, I mean, the best way for me to describe them is if you have a coin, and these are the two sides of the same coin, the two different sides of the same coin. So banking as a platform, as the name implies, the bank is actually the platform, and they own the delivery channel. They don't necessarily own all the services, but rather they aggregate them via APIs from third parties. But it's important they own the platform. That's why they are called banking as a platform. Now, the other one, the banking as a service, is the bank taking a backseat role and providing only the infrastructure, meaning they provide the technical platform, they provide the licensing, and they might be providing, depending on the variation, additional services. But the customer facing and the selling is done by third parties. So basically they enable third parties like fintechs to provide their services, and they're just sitting behind. So imagine if you have a bank, a mid-sized bank, that they don't have any technology or any clue on what to do. This could be one of the easiest things to do. And as I mentioned before, there are variations in terms of providing only the regulation, you can provide the licensing, you can provide also the infrastructure. So depending on how good you are in certain things, you have a good level of maneuvering and a good level of playing within this space. So these are the two models that make a lot of sense for banks to really understand how they work. Last thing for today, which I would like to clarify, because this is again confusing and some people don't get it. Open banking is not banking as a service and is not embedded finance. So actually, open banking is not a business model in itself. Rather, I would say open banking, it's enabling other models. So the banking as a service and the embedded finance, we can say that they are built on top of open banking, or they are at least facilitated by open banking. Now, banking as a service, I described just before now what exactly this is about. And embedded finance is actually the outcome of banking as a service. So you can, embedded finance is all about enabling players that are not financial services players to offer financial services products. How do you do this? You need the infrastructure of some players that are the so-called banking as a service players. So imagine, let's say, Uber providing a payment method. You need somebody that is going to be providing this payment method. So the outcome is what we call embedded finance. And if you go 1-2 levels below, you have the banking as a service enabling embedded finance. So I think it's important to make this distinction so that people can understand a bit better what the difference is. That was all. Thank you. Happy to discuss.
Thank you so much for all of that incredible insight and for taking the time to put together a specific presentation to really walk through the journey that's happened within Europe. We really appreciate that knowledge. Hoping you can pass the host back over to me just in case anybody's trying to get in.
Yes, let me stop sharing.
That would be lovely. Thank you so much, Cindy, for joining us and helping as a moderator. And we do have 30 minutes left because we wanted to leave room to ask you questions. We've got a very active community as we are just at the beginning of an implementation stage within the Canadian market. And we've definitely been talking about open banking since your journey has begun in 2017. But we've definitely taken a slower path to get to our open banking, kind of looking at what's happening with other markets and meant to be a fast follower, but I think with the pandemic, we became more of a slow follower from that perspective. But we did get our open banking lead about 9 months ago. He is working diligently and having working groups and driving the discussions forward within the Canadian market with a goal of getting Canada to open banking, read-only, customer-only access for September of this year. So we do have a path, we do have a journey. It is more of a hybrid perspective. But looking at some of the charts, and I was so grateful that you were able to join us because I do follow you on LinkedIn. I think the insights from open banking to open finance and payments that you're sharing on social is really impactful, very well thought out. One of the charts that was my favorite, and I felt really depicted the open banking, open finance, open data world very succinctly, is that chart that kind of encompasses in a circle or three circles, and sharing that those three circles very much depict how small open banking really is at the first step and grounding point, and how crucial it is to build upon from there. But when you're looking at what's happening in Europe, and the difference between request to pay, which is write access, and onboarding, which is more read access, seeing the 5 million, let's say in the UK, because those are the numbers I have, what's the percentage usage of, let's say, being able to do a payment versus an onboarding for open banking, which has been the most useful, is my question.
Look, I think, as I mentioned before, to be honest, I think we are now, even though we like to say that we have some years behind us in terms of implementation, I think we're still at the beginning. So it's not that everybody or majority, even in some countries, are using this method. So I think we are still, even in the most advanced countries, and I can, for example, mention the Baltics in Europe, because they're quite digital savvy and they're used to some of these payment methods. Even there, adoption is not there yet, and it goes back to my original comment of consumers not understanding or not feeling confident, or not even knowing sometimes that you have the option of doing a few things, and also it goes on the merchant side as well. So I think, yeah, as I said, to be honest, having statistics is not easy, but I think we're on the low side still. So and it goes down to the people understanding that this is a secure way of doing financial transactions. And of course, it depends very much on the offering. So if you don't have the merchants or the providers having an incentive to offer this, then it's also difficult. So I think it's going to be a slow adoption curve. We see this happening all the more, but I think we do need also more time in Europe as well to see this happening. So we do have a couple of examples, but I think we're still at the beginning.
Still in the growth path from that perspective. I encourage everyone to put their questions within the chat, and we'll definitely get to them so that we can layer in insights and questions, because we have people joining us from Europe, we have people joining us from the Canadian market. And when we look at PSD3 being the next stage forward, is there exact timing on PSD3 coming to market? And can you shed some light on maybe those details as well?
I think that this is not very far away. I don't think that there is a date, but if you discuss, I mean, you will hear different dates. I think within the year we might be hearing something, but I don't have a concrete date to provide. I think it's not very far away. What will be happening is, I think, in terms of PSD3, I think there are going to be two major things. So on the one hand side, I think PSD3 is going to be trying to provide solutions to some of these problems that I've been mentioning. So to some of the problems that we've seen arising out of the implementation of PSD2. And of course, the other one, which we do see in the UK, which is a bit more ahead in terms of the rest of Europe, is the open finance. So I think we are going to be seeing, and you do see some central banks around the European markets discussing about open finance. So I think we're going to be seeing a bit more an effort to enable open finance as the next way of open banking maturity. So these are going to be the two pillars, if I may, that we're going to be seeing, not in the very distant future.
Yes, definitely. PSD3 pushing towards open finance, similar to Australia and others kind of driving towards the open finance perspective to get to that holistic place where you were speaking of, where it starts to help the consumer and the SME in even more ways because of the access point of being able to see not just their banking, but other aspects of their financial health and have secure ways to access those
Michelle,
really important data points.
Apologies. If I go back to the implementation of PSD2, it's one thing that we announce something, and it's another thing that this is done, right? So even if we say that PSD3 is going to be announced in a certain way and that we are going to be specifying things, I think it's going to take time to go through the stages as we have seen in PSD2. Of course, it might be easier because now you have a basis, but I think you should not be expecting that it's going to be, one date, one off, and things will be working. It's going to be done in stages. So that's something that we have to expect.
Yeah, fair. I have a question from the audience from Andrew Homan, who's at FICONEX. He said, in Europe, is there participation like specifically amongst smaller regulated financial institutions? Have any regulated markets made it mandatory for the smaller FIs to participate?
No, I think we have to differentiate between what's happening in the UK and what's happening in the rest of Europe. So in Europe, what has been the case is that all banks, no matter if you're small or big, they have to comply, meaning that if you're a bank, you have to provide access to your data. So the size doesn't matter. I think in the UK, for example, they've taken a different approach, and I think it has been only the 9 biggest banks. So I think this is the differentiation.
Yes, fair. And is there, because I have the UK numbers, but is there European numbers, like the UK's hit 5 million from an API perspective or user perspective? Is there a number out of Europe separate from the UK of usership within the PSD2 play?
Yeah, I mean, I know that, I've also seen that the UK has been publishing more numbers, but in Europe, to be honest, I haven't seen a credible number. I mean, what I've seen is the number I've mentioned before. So I think we have 2,700 new players on the market within this 2-3 years since 2019. But I think it's a bit more difficult and challenging to have numbers because they're coming from different markets, and you have 27 different markets. So that's always a challenge. So I don't want to provide a number, even though I have some in mind, because I'm not sure if they are even correct. Is not an easy one to validate.
No, fair. And maybe just on a general point, who do you think within the European countries have really spent a lot of time on open banking and are seeing the most benefit from it?
To be honest, I don't think there are huge differences among the markets. You could say that some countries are a bit more advanced, but that goes also hand in hand with the digital maturity of the countries. So I think I was mentioning the Baltics before, but they're quite small, and they used to have also some similar established payment methods that are quite close in terms of user experience to open banking. So I think for these guys, it's going to be easier to transition. If you, for example, take the Scandinavian markets, I would say that they're a bit also more advanced. Netherlands also in terms of maturity. But in general, I don't think that you could say that there are huge differences. So
fair. Do you think that maybe like the Scandinavian market is slightly ahead because digital ID infrastructure is slightly ahead? Yeah,
I mean, they are ahead in terms of digital adoption, in terms of maturity, in terms of payment methods. So, for example, if you go to if you go to Sweden, for example, most of the payments are not done are done without cash, right? It's a cashless society. If you go to Germany, or if you go to Austria, or if you go to other European markets, let's say Eastern European markets, this is not the case. So I think this is also influencing the payment mix and how easy people are feeling confident to adopt new payment methods and to have somebody getting access to their data, getting access to their account, and facilitating a payment from there, right? So it makes a difference. And of course, you have these different payment local schemes across Europe, which are quite fragmented, right? So these are also playing a role. So That's what I'm saying. The European market is a bit of a challenge in terms of bringing all these different countries together. And the fact that we did have an implementation that was left to the countries to do, it also created some kind of discrepancy across the countries.
Fair. And as you're looking at it, because you're in Switzerland, so from that perspective, from your company that you're working with, you're working on payments platforms, but you're kind of seeing this all unfold on a global scale and all of these insights. Currently, the way that I'm seeing it is there's a large discussion focus on open finance and what that's going to enable, and how it's the evolution of what's going to happen across the globe based on what it enables. What's your thoughts on the movement and the, what that's going to enable if done properly, right? You've shared some things that need to be fixed along the path, but the actual good it can create for both the consumer and the SME.
For me, there's no doubt that this is a very, very big opportunity, not only for the business side, but I mean, it can be a win-win. And I think and that's the good thing. It can be a win for the consumers and the businesses, and it can be a win for the providers, right? And that's the thing. So I think we do have, especially on the business side, we do have some opportunities to do stuff in a more efficient way. And that's why I think open finance, if you look at the use cases that I was discussing before, the main benefit is that you are having somebody that is doing the work on your behalf, and you're just reaping the benefits, right? So imagine if you have somebody, it's not yourself, but you have somebody working in the background for you, and then you're essentially being given the outcome and say, okay, here you have an improvement in terms of pricing, in terms of a better product, in terms of the overall financial situation. And then you can have all this under one umbrella, and you can see in the dashboard basically everything that is happening with somebody working in the background for you. I think that's going to be a huge change. And as we are getting used to these, let's say, apps and the super apps and all this discussion around being a bit more digital and going to and our life becoming essentially a digital one, I think this is going to be fitting quite well with this concept. Now, going back to the question, are we ready for this? I think there is a lot of discussion, which is justified, but I don't think that this is going to be coming as soon as we might think if we read what is being discussed, right? So I think so the maturity is going to be taking some time, not only because of the consumers and the businesses, but because of the regulation as well. So that's something that is going to be evolving, and it's going to be evolving together. And you have to have the match of the two sides for this to be a success, right? You have to have the regulation right, and you have to have the consumers and the businesses using this and feeling confident that this is adding value. I don't have any doubts again that this is going to be the case, but I think the maturity curve is gonna take some time.
Yeah, fair. So what we've learned today so far is education is key, not only to the businesses, but to the consumers in the ecosystem. That looking for interoperability and a path forward is quite crucial in comparison to the UK and Europe's mission on the API optionality has definitely been different, right? Because the UK chose one and Europe chose many. And then looking at the learnings from PSD2 and what Canada can look to and learn from based on the challenges that you guys are overcoming by launching PSD3, and looking back and seeing how you can make sure that your TTPs are live in real time, and if something occurs and they need to be pulled off for some other reason, that happens in real time and that there's oversight within that infrastructure. So there's trust enabled in the system by having that clear path. It seems quite important. And then I think just as you look at the use cases, that's something that's really important as well. And then I think just going to another question that we have from Andrew, who's at MX, quality of the many APIs is poor. How do you solve this through reg or open banking governance, monitoring, reporting, and onwards to ensure API performance and uptime?
Yeah, I mean, that's a good question, and that's a problem that if you solve is gonna make a huge difference. But I mean, basically, it's a difficult problem, but you have two possible options to solve it, and it's, you know, one is you penalize, and the other is you incentivize, right? So if somebody is not working well, you can't say I have to penalize somebody. So if your API is not working, if you're not providing adequate access, which you should, then you get XYZ penalty. And the other one is the incentivization. So meaning, going back to my point, that you have to make the banks understand that it's not only the compliance part, but it's also, they can also take up the role of these third parties. They can become themselves providers of such information. So for me, the incentivization is probably working better, because if you penalize somebody, it's going to be working to a certain extent, and you might say, for example, that you have a minimum basis that you can keep. But the better scenario is to educate the banks to open up the opportunities, and for everybody to understand that this is an opportunity, and it's not a lose situation, it's not a compliance burden. Going back to what I was mentioning before, yeah. But it's not an easy one to implement. I think we lost Michelle. Let's give her a couple of minutes to join back. I think there should have been a connection problem. So apologies for this. So let's give Michelle an issue, and maybe until Michelle is back, maybe I can read some of the other questions here. So I think we addressed the quality of the APIs that is poor. How do you solve this? This was what we just discussed. I think there is a question around US regulators and Canadian regulators that are more principle driven. Okay, and then there is a question which I guess is that's an interesting one. What are the learnings so far? What are the three key takeaways from them to? So if I go back to my previous comment, I think in terms of key takeaways, so one is that you have to incentivize the banks, as I said before, so they have to see this as an opportunity. The other one is that you need to promote this in a better way to consumers and merchants. So it's not only a story that has to go between banks and the third parties, but you have to inform and you have to educate the merchants and the consumers, which is not done well enough in Europe so far, because these are going to be the guys that are going to be helping you to adopt this. And the third one is probably that, so Michelle, I'm just trying to answer the last question in terms of learnings, because I understand you had a connectivity issue, so no problem. So the third one goes back to my point around the standards. Maybe there could be done a better job in, okay, you have to have an API, tell me what is the optimal standardization, so I don't have to choose among 3-4 options and reinvent the wheel, much like the UK has done.
Yeah, fair. Thank you so much for answering that. I think we could ask you questions all day as we look to being at the beginning of our journey, and you guys have spent many of years within this journey trying to drive forward. And I think from an education point, just wanted to dig on that, because at OFNC, that's kind of our goal, is education and advocacy for the SME and the consumer, because they are the most important aspect of both the open banking and the open finance system, but yet they're not largely aware. And I think the word open banking scares them to exact opposite of the meaning of open banking, which is security, to move away from screen scraping and give them a safe way to aggregate and access their data points. What would you say would be the most, because there's a lot of great insights that you share online, is there have you seen a really great ad or a really great way to speak to the consumer or the SME on pay with bank or the advantages of open banking?
To be honest, I cannot recall a good one, and I think I cannot recall even another one. And I think that's the problem, what I mentioned before. So this has not been something that you actively advertise, right? And part of the reason is that I think we are missing the purpose here, right? So I don't think that you have merchants seeing the benefit of advertising this to their consumers. The consumers probably don't know about this, so I think it has been left to the countries to do the beginning, and I think this was not done so far at all, to be honest, or to a very small extent. So I think there's a long way to go in this sense. I think it has to be. It has to start from the ones that are implementing. So it has to start maybe from the regulators. It has to go down through the banks. It has to go down through the merchants. They have to understand that this is something that could be beneficial for them. And here there is a huge discussion. I mean, we are now in the middle of a crisis, and we are discussing about. I mean, we all know about the fees that credit card schemes are charging. And on the other hand, you have something which can potentially be with a very, very low cost. Right, so that can make a difference for the merchant, for the consumer, provided that they know and they can understand, right?
Yeah,
so,
I appreciate that, because I think it's a challenge we're all having. I think first in your market, followed by our market, there was a class action lawsuit from the small, medium-sized businesses in Canada to the credit cards based on fees, and I think you're right. This is actually quite a great solve to focus our time on versus trying to try and fix or change a market that's been around forever. Give an option that is, largely affordable, secure, and promote it and spend time on that. Because I think the best use case I've seen to date is actually out of the UK from the government side, partnering with a fintech and allowing for taxes to be paid. Pay with bank versus pay with credit card versus send a check versus send a wire, which can get lost. And I think we can all say 1% of payments are of challenge or go to the wrong place, get lost. Like, to me, the biggest win is when you facilitate this on to a tax payment, especially for small businesses, because they only do it once a year, let's say, or even personal tax payments. The government gets their money faster, they don't have to pay fees, and the consumer and the SME knows that the payment went through and it was authenticated, and then everybody gets their money faster and has more peace of mind and less money spent on chasing payments, in my perspective.
And by the way, you educate, that's a way to educate them as well, right? You see something working in real time, you don't have to advertise, you see this happening, and if it's coming from the state to pay your taxes, then you understand that this should be secure enough, so you don't have any hesitation to do it. And the moment that you have done it, and you know that this is a method, this is an option, then this is the best way to educate. So in this respect, I think the UK has been much more advanced from the EU. But again, part of the reason is that we are talking about one market, and again, that's also something that Canada can benefit from, and not 27 different markets, right? So in this sense, you can move much faster and be innovative, right? Because you don't have to debate things forever. You don't have to have implementation across countries. You don't have to compare different cultures, different local schemes, right? Many things. So I think in terms of potential and in terms of how fast you can go, I think Canada, given the maturity of the market, you do have a good potential of, if you want, you can even become one of the front runners, right?
Yes, I'd love to come from behind and go back to the front of the line, because I think we're still we've just started past the starting line. And I think there's a lot of time needed to kind of catch up. One last question, because I know we only have 5 minutes left. It's kind of a hard one, but what are your thoughts on consumer data rights? Because right now, Canada only has a data portability. We do not have the similar path of Australia, now the US, New Zealand, and many others that have given the right of the data to the consumer. In Canada, they have the right to port it. but not the actual right itself. So maybe just your personal thoughts on that.
Yeah, no, I mean, I think it's indicative of the importance of data that we are being. I mean, we have been discussing about data. Data has become an issue over the past years, and before it was not the case. And actually, data can make the difference. I mean, at the end of the day, open banking is about data, right? It's nothing else but providing access to data through rails, which we call APIs, nothing else. And the question is, who does the data belong to, right? That's always the key question. And what kind of usages you allow with the data. I mean, in Europe, we have GDPR, as you know, which is the most, let's say, strict approach in terms of data. It's also very, very thorough. So it's, it's very detailed in terms of what you can do and what you cannot do. But it's also creating, and I'd like to be honest, it's also creating some problems in terms of if you're coming from the commercial side, you have challenges in terms of adhering to all these standards, to all these rules that they have applied. I think the approach of saying that the data belongs to the consumers or to the ones to the businesses, and allowing them to kind of make use of their data across different businesses or across different providers is quite an interesting one. I mean, it takes a regulator to say how this exactly will be done, and I would say it's it's not an easy approach, but it's something that that could provide innovation across many lines.
Yeah, fair. Thank you so much for that insight and taking the time. I know it's quite late in Switzerland at the moment, so appreciate you sparing some time for us to educate and share what's happening in your market and all of your incredible insights. So thank you for joining us. Thank you to everyone who came over to be a part of this today, and thank you for sharing your questions. We're here to share more information. Look forward to seeing you hopefully at an open banking event, and we look forward to our next session, and maybe you can pop in. So thank you so much, and Happy New Year.
Thank you very much. It was a pleasure. Thank you. Happy New Year.
Thank you. Well, thank you, everybody. We're going to edit this recording and then send it out onto our YouTube channel so you guys can share it and like it there to anybody who wasn't able to make it, and looking forward to the next session. So have a wonderful day.
Thank you.
Thanks so much.
Bye.
Bye-bye.